No. Hello, Mr. Bean, Makari. Just giving it a minute here for people to roll in. Angel, what's up, brother? I was actually going to reach out to you. How you doing? I haven't seen you today. All right, few minutes here, everybody. So we'll get started pretty quickly here. Just giving people a minute to get into the YouTube and into the call before I get started. For the people in Discord, you should be able to see my screen. And basically, as I'm going through this, if you have questions, you can at me in the Discord or ask in YouTube, and I'll eventually get to all of the questions. But I'll probably cover stuff that people ask before. Basically, within time, I'll probably get to most of the questions anyway without reading questions. All right. Anyway, I'm going to get started. I'm pretty sure everybody knows, but my name is Drew, also known as Catching Rockets. I'm going to wipe my spy chart here so we can start with a clean slate. Today we're going to be doing a class on volume profile. So POCs, virgin POCs, if any of this doesn't make sense, I will be going over all of it shortly. But if you're in the YouTube, below in the description, I describe how to get volume profile for ThinkOrSwim if you're using that platform. I also explain how to get it in TradingView. Those are the only two platforms I know of that have it. I'm sure there's others that do, but those are just the two that I use. In TradingView, you're going to go to indicators, and you'll search for VPSV, volume profile session volume, and it's this one here that you'll use. You don't want to use the HD one. You want to use the non-HD one. Once you add that to your chart, it'll show up here, this little down arrow. You want to click on the settings and change your value area to 68 and your row size to 200. Sorry, 1 second here. Okay. So anyway, we'll get right into it. So with your volume profile, these red lines that you see on my chart, these are POCs. And what a POC is, it's the point of control, which is the area on any given day where the largest amount of trading took place, whether that be buying or selling. Generally, it's going to be both. And so these become important levels. So like if we look at if I draw some of these, like if I draw this POC here, at the time of drawing this, this would be a virgin point of control. And I always label them so I know when I'm charting if it's a virgin POC or not and when it's from. Every day I'll go through, and if this becomes a non-virgin POC, and I'll explain the difference in a second here, I would go back in and edit this and erase the V part of it to just say that it's a non-virgin POC. So let me just put a few of these on really quick. I'm not going to label all of them because that would take way too long for the purposes of this video. But generally, you're going to want to chart all of the ones that are like this right now. This is our current downtrend. Oh, I'm on a 3-minute chart. Why am I on a 3-minute chart? Sorry about that, everybody. So you want to chart these on a 30-minute chart. So now you can see, now that I switched to a 30-minute chart, they've moved, but that's correct, which is a good thing for me to point out. Regular trading hours and extended trading hours, they don't really move very much. Sometimes they do, but when you move from 30 minutes to like 3 minutes or any other time frame, they will move. But that's not an issue because we want to chart them on the 30-minute time frame, and they will be respected on the 30-minute time frame. So ignore the fact that they move when you switch to a different time frame. But you do want to chart them on the 30-minute time frame. So again, sorry, let me just draw some of these in really fast. This would be the joy of starting with a naked chart. All right, so that's going to be good enough right now for our purposes. So if I turn this off just so it's a little bit easier to see, we'll focus on this day here really quick. So this POC was formed. Oh, I wanted extended off, but that's okay. This POC here was formed on March 17th, as we have, you know, noted here. And from the point where it's formed until the following day, like it will get touched a lot, and it might get touched in after hours and pre-market, and that's fine. It's still going to be a virgin POC on the day that it's formed. After the day that it's formed, so the following day, if it gets touched at any time, it would become a non-virgin POC. So basically, the day it's formed on and after hours and pre-market, it can be touched a bunch of times by candles. It doesn't matter. It still remains a virgin POC. But on the following day, if it gets touched at all, it would become a just a regular POC and not a virgin POC because it's been touched again. So this one here on this particular day, it remains a virgin POC all the way until April 12th, where it gets touched right here. So on April 12th, I would go and change this to a regular POC. Now, this might seem kind of silly, but, you know, like this one here is a VPOC. This is a VPOC. And the reason that virgin point of controls are more important than regular POCs is they act as stronger magnets for price. So, you know, I've just charted like this particular downtrend here. So most of these are virgin POCs. This one here is a virgin POC. This one here is just a regular POC. This one's a virgin. And the one up here above is a virgin as well. So where this becomes like important is if I have, in this case, 1, 2, 3, 4 virgin POCs to the upside, and I have none to the downside, more likely than not, the next time the market opens, we're going to see an uptrend start to form, and we'll start taking out these virgin POCs. Because like I said, virgin POCs are going to act as stronger magnets for price than a regular POC. Now I want to explain like the psychology of POCs. Hopefully everybody understands the difference between a virgin POC and a non-virgin POC at this point. So from a psychological perspective, actually, let me replay really quick back to here because I know I'm going to have a POC down here. Yeah. So that's a little trick you might have seen that I just did with TradingView. It only plots back the POCs for 30 days roughly. But if you use the replay feature, you can get another 30 days back roughly. So we have a POC here. It might be virgin, I'm not sure. Sorry, we'll get into the psychology in just a second here. Let me just plot this one as well, just in case. And now turn off the replay feature. Okay, perfect. This is what I needed. So, if we're looking at the, basically what makes POCs and VPOCs work is, if you're a retail investor, actually, let me grab these up here really quick. I'm sorry. I'm a little disorganized. I haven't taught a class in like a good month. And, I mean, I taught one last night, but it's been a while. And I'm a little rusty. Sorry, everybody. But so, okay. So if you're a retail investor, and this is how the psychology of this works. If you're a retail investor and you're buying shares of SPY up here at 1456, and then the very next day it rips down to 1417, or so sorry, to 417. You know, you're almost in the whole $40, give or take. You as a retail investor right now should be thinking like, as soon as it gets back to 456, what are you going to do? Most retail investors are like, I'm going to sell, break even, just get out of the trade, walk away, you know, lick my wounds and live to trade another day. And that's true for retail investors. Once we're down on a trade, we're happy to just jump out, break even. Hang on one second. I'm sorry. I'm going to open my window. It's getting pretty warm. So that's why these POCs work. So if retail investors bought here, you know, price comes down, next time we come up to this range, you're going to see selling. Which is why we form new POCs almost exactly at the same price as these other POCs. So I don't know if you can see here really well, but we actually came up right to this POC and the market closed and then we gapped above. And then this POCs, they start acting as support. But then they'll also act as resistance, you know, back down. So just be aware, POCs will act as support and as resistance. Because, you know, it's, again, if you bought here and you're a retail investor, you know, maybe you weren't able to sell here because the market closed and then it gapped up. But then as soon as you came back to here, you're like, oh, like, I'm not going green. I'm not going red again. I'm going to get out. So that's why these work. And then the other thing that we see is, you know, this is retail buying up here. You know, most of this, you know, more to the upside. Down here, we're going to have market makers placing large orders, you know, which of course affects the market. So like this day, for instance, February 24th, you know, we were in a downtrend. I'm sure if we go out to like a larger time frame, yeah, so this is even more of a downtrend all the way down to February 24th. And then somebody was slapping the buy button here, you know. Um, so we actually gapped down, and then a ton of buying took place here that we just ripped up. Tons of volume. So on this day here, we just saw a huge rip up with tons of volume. So right here, it's safe to assume you probably have a market maker. You know, we'll just make up a number because we don't know. But let's say a market maker was like, oh, I want $500,000, sorry, $500 million of SPY at 417. So they place their order on the dark pool here. Obviously, their dark pool orders don't affect the price, but we all see those dark pool orders go in, and then people start buying up shares or buying option contracts to the upside because we see that massive order go in, right? And then this here is going to become, where is it? I'm just going to draw this really rough. We'll fix this later, but this here becomes a demand zone. So every time SPY comes back to here, we rip up from it. There's a few reasons for that. So this market maker that put, a $500 million order, dark pool order here, when the price takes off, they don't chase. So they're not going to move their order up here. So let's say they got filled for 200 million right now. Price leaves. Their 300 million order is still sitting there waiting for the price to come back to this level. So it rips up, a few days go by, wiggle, wiggle, come back, boom, we're gone. So they get another partial fill here. But also retail knows this is a demand zone, so retail steps in and buys here as well. Price takes off again a little bit, come back down to this level, boom. The rest of this market maker's order gets filled, and we rip up again, and we're off. And then, market makers know these levels as well. They know POCs and VPOCs, so they're probably doing some selling up here as well, taking profit on their, their contract or their shares and contracts they bought down here. So hopefully everybody understands the psychology of POCs and VPOCs now, and why they act as such strong magnets for price, and why they act as support and resistance as well. Nobody's typing, so I'm just assuming that everybody's on board and understands. It looks like JRH is typing now. I'm just pausing. Oh, wait, let's see. Oh, Hook'em, I'll get to that. Yeah. So somebody in Discord said with the VPSV update, you can extend your value area high and your value area low along with your POC. They both seem to not extend once it's been touched like the POC. How much should we read into these ones still extended as a respectable magnet like we do POC and VPOC? Well, I mean, if they're still extending, they're going to be virgin POCs. So they're going to act more as, support and resistance, and also price magnets. I don't extend them for the reason that, like you said, once they're touched, they don't extend anymore. So I draw mine in manually, like you see on this chart, because I don't want them to stop extending once they get touched by the price, because these ones will still be respected after they get touched. It's just not quite as strong as just not quite as strong as a virgin POC. What about the value area high and the value area low? So I haven't really played with that extend thing. I'm going to get into the value area in a minute, and just explain it like from how I understand value area. The only thing I use value area for really is just the 80% rule, and we'll get into that. But so, let me see here. This is, yeah. So, Now, I want to show you guys really quickly how to draw supply and demand based on your volume profile, and also what volume profile is. So I've got that turned on already. We'll go back on the replay feature again. So this might be redundant for people that watch my YouTube video last night that I made, but for people that didn't, it won't be redundant. So on, actually, let me zoom in more so you guys can get a good picture of this here. And I'm going to turn off my candlesticks. Excuse me. So this isn't the best example, but it's a good enough example. This is a P-shaped volume profile, meaning it looks like an uppercase P. When you see a P shape, it generally means that we opened somewhere on the bottom and throughout the day went to the upside and then probably started trading, like chopping sideways up here. I honestly didn't look before I turned off the candles, but I'll turn them back on so we can get a look. Oh, I'm actually backwards. Interesting. But you can see more of the trading took place up in this area. So this is actually why this is not a good P shape, is because it did the inverse. We did open low, come up, and trade a lot up here, and then sell off at the end of the day. But this is still a P shape. It's just not a very good one. So when we're drawing supply and demand on volume profile, so again, all of these lines just represent buying and selling that's taking place. And what we want to do is, especially on the P-shaped ones, we want to take 50% of this volume profile and draw a box around it. And that's going to be either our supply or our demand zone. So in this case, 50% is roughly right here. So any of these lines that fall into this 50%, I'm going to encompass. So right about here to right about there. Hopefully that makes sense. It's a little bit hard to communicate, but this is going to be, you know, when we're below it, it's going to be a supply zone. If we're above it, it's going to be a demand zone. And then we'll actually go to a day where we have a better, oh, well, so here, this is a B shape. Again, not a great one because we have some trading taking place up here. But on this day, it looks like we opened up here somewhere. We did some trading through here, like choppiness. And right here, we have a really skinny belly, which means we flew through this area. And then here we have a really big shelf, which means we chop sideways here for quite a bit on the rest of the day. So when I turn the candles back on, we'll see like choppiness through here. Movement through this area is going to be really fast. It could be down and up, you know, in both directions, but should just be a few candles to the downside or a few candles to the upside. And in this area here, we'll chop sideways. But before I turn the candles back on, let me just draw my supply zone. So right about there. So now if we turn these candles back on, yeah, so you see when we got to this skinny belly part, like I said, it's basically 1.5 candles, you know, half a candle here and a full candle. We just flew right through this skinny belly. And then started chopping sideways again here. So this is not a great, excuse me, again, not a great example of a B shape, but it is kind of a B shape. But I will show you guys a really good example of a B shape right now. And the B and P shapes, like I said, those are going to be more important. So we're looking for, oh yeah, this guy here, I believe, February 25th. Yeah. So here's a really good P shape for you guys. And I'm not going to draw in all of these. We're just going to do a few so you get the concept. But so you see all of this value, our volume profile is super skinny. We don't have a lot of trading taking place here. And then up here at the top, we have the P shape. So this is going to be an extremely important POC and an extremely important volume profile. So again, we want to take 50% of this. It's actually pretty big. We're going to go from there to about here. And this one is going to be a supply zone. I'm sorry, a demand zone. So we're going to make this one green. So now I need to explain like the what's it called? The intricacies of volume profile for you guys. And I'm looking for like a good one where I can show you guys a good example. And I like to do this with the candles off. And I'm sure you guys know there's no way I have all of these memorized. So I'm just looking for one that's going to look interesting for us. I think this is probably the best one because we have 3 volume shelves that we can look at. But so if you use volume profile on your charts, and you should when you're trading, you can pretty much read price like a book. So again, I have the candlesticks off. I have no idea what happened in this trading day, but I know if I draw a box around here, I'm going to chop sideways in this box. And if I draw a box around here, there's going to be some sideways choppiness in this area as well. And then lastly, if I put a box down here, we're going to chop sideways here as well. And so what these are, on the volume profile, we have these areas that stick out. These are called volume shelves. And the areas between where there's not a lot of volume, those are called skinny bellies. Down here is a skinny belly as well. So the way I like to think of volume shelves is like stairs or like rungs on a ladder. Anywhere where you have a stair, you know, like if you think of yourself as a person walking up the stairs and then the staircase ends, you have 2 choices. You either walk off the edge of the staircase and you fall, or you can stay standing on the stair that you're on. Or you could go down to the stair below you, or the stair below that, but you can't go to a step that's not existent. So if you think of stock the same way with your volume shelves, you know, we can hang out here. We have a stair to support us. Once we pass through this area, there's no stair here. So we'll just fall from here down to this next step, and then we can hang out here again. Once we cross below here, again, no step. We're going to quickly go down to the next step, and then we'll be able to hang out here. We can step up to this step, down to this step, but we can't chill in this area here because there's no support. There's no buying and selling taking place here to keep us hanging out in this area. So we can step from here to here, here to here, here back down to here, back up to here, but we're going to quickly fly through these empty areas. If we did break to the downside here, you know, I mean, obviously our volume profile would be bigger, but since this is so skinny here, we could fall all the way down, you know, quite a ways. And once you get into things like this, then you can turn on your, this one here is called VPRV, which is your visible profile volume range. Did I say that correctly? My gosh. Excuse me. Let's go to indicators and look at it. It's VP. There we go. Volume profile, visible range. I think I said it right. But so you can see here on our visible range, we have a skinny belly here. We have a little bit of a skinny belly here. We have a pretty big volume shelf here. We have a volume shelf here, a little shelf here. But if we did fall below here, there's nothing to support us. If we make the visible range bigger, okay, now we start to form a little bit of a volume shelf here. So if we cross through here, we could easily fall down to this next shelf here. So hopefully that's making sense. Hey, Brian, what's up, brother? I'm going to turn this off so it's not taking up a bunch of real estate on our screen here. I'm going to turn the candlesticks back on just so you guys can see. Based on this day, I mean, it's hard to say. Like, since we have 3 volume shelves, I'm guessing we probably opened here or here. We would have traded sideways here, fall down into here. We're going to trade sideways a little bit. I'm guessing we came down here, traded sideways a little bit, and then ended up back at the top. So maybe we opened here or here, came down here, and then ended up back up here. But let's take a look. Oh, well, so we opened here. But pretty much what I'm saying, you know, we traded sideways here a little bit. 3 30-minute candles is, you know, hour and a half roughly in this area. Came up to here. Not a whole lot right here, but we did come back down to this area later in the day and chop sideways for a few candles. And like I said, most of our trading took place in this area up here. But so what you want to notice is once these shelves are formed, you know, like by the time we're trading here, once you have this little skinny belly, it might not look like a whole lot on 30-minute candles, but that's 449.72 down to 449.30, you know, 50-cent move, but we end up playing it to the far side. If you grab puts, leaving this box into this narrow belly, you know, you get a good move. And then same thing, if you take calls as you cross above this box here, you get a good move to the upside as well. So that's how I try to use volume profile during the trading day. The only thing is I don't draw boxes around it when I'm trading. I draw boxes like after the market's closed. So on this day, I would grab, you know, roughly 50%. So everything from here to about here and back. All right. So hopefully everybody is keeping up and understanding. The finest arts, I will answer that, but I'm going to answer it at the end of the video. Okay. And it's actually, the aha moment is probably not as aha-ish as you might imagine. So the only other thing I have to cover on volume profile is going to be the value area. The value area, I'll just use this one. I'm going to turn off the candlestick so you guys can see it a little bit better. So you can see up here, the top of the value area is shaded like a darker gray. And down here is shaded as well. And then I have this highlighted area in the middle. So this is the value area. That's where, excuse me, that's where 68% of the trading volume took place on any given day. One of the cool things about, that's correct, Asuri, that's exactly how I do it. I am a robot. Sequence coded me, and he taught me how to speak as well. So, and you should be trading. Get out of here. So our value area here is where 68% of the trading volume takes place on any given day. The only really key important thing for me about the value area is there's a rule that's very good for newer traders, because it's a good, easy trade to take. You just have to trust it. And that is, if the price comes down below this value area and then you cross back over into it, you can take calls as soon as you cross over into it. And there's an 80% chance it will go from this side to this side. And then on the opposite, if we cross up above out of the value area and back into it, you can take puts from the top of the value area down to the bottom of the value area. And the only thing that I would warn you about is, here where we have our POC forming, you can expect some resistance there. So if we're taking calls, from this part of the value area up, we might see like a bull flag form here. You might want to exit the trade here because it might also reject. But if you wait through that little bit of choppiness, there's a good chance 80% chance it's going to go to the far side. And I'm going to turn the candles on again really quickly. Excuse me. So you guys can see what happened with this value area here. Again, I don't know. I didn't memorize this, but so here you see it. We based a little bit inside the value area, came down out of the value area, crossed back over into it here. If you grab calls, you're good all the way to the far side. 80% rule played out here perfectly. So that's, don't take my word for it, but go and back test it and see for yourself. I mean, here it is again. Value area is formed up here as we're basing basically. We come down, cross out of it here, and then we go back over the value area right here. If you take calls, you're good all the way to the far side. And you'll just see this over and over and over again. Like on this day, you couldn't do it because this was a trending day. So the value area wasn't established for you to take, a trade. Same thing here, trending day. But on days where we have like a typical day, where we have like the normal ebb and flow of trading up and down, this 80% rule will play out, believe it or not, roughly 80% of the time. So that's that. Now we'll get into the really cool stuff. I'm going to turn off the replay feature here. At least I think this is the cool stuff. So now we're going to look back at all these supply and demands that we drew. So this one here, I should date it, is going to be February 25th. And so we'll drill down to the 3-minute candles for this one. I showed this on a video I did last night, and I showed it specifically because it's trades that I took. So I don't want to get too heavily into technical analysis, but on April 12th, a couple days ago, I remember the day really well still. Here, let's see. I don't remember the open, surprisingly. Oh, I do. I don't think I took many trades here. But so here, I have kind of an ugly flag. I played it. It worked out. Here, form another flag. And then here, we form another flag. And this wasn't planned for today, but I'll cover it really quickly. How I play bull flags and bear flags. For me personally, I don't normally draw the flagpole because I don't need this part to help me trade. But you have a few trades here. If you miss this bear flag, so our safe entry on a bear flag, when it comes down, all of this, I don't know, you could say this is the top of the flagpole or this is the top of the flagpole. It doesn't really matter. and this is our flag here. And normally the last touch of the flag, the bottom of the flag, is going to be your safe entry. So in this case, it's this white candle where we wick down really fast, but you wouldn't have got in the trade on this wick. But so this last touch here of the flag is going to be your safe entry. So this blue candle, when it crosses below the last touch here, this yellow line I drew in, that's where you would hop in puts and you'd play them to the downside. And with flags, you grab the top of the flagpole to the bottom of the flagpole. And let's see what happens if we go there. Yeah, they're both good. So a bull flag and a bear flag is going to be a measured move. So you go from the top of the flagpole to the bottom of the flagpole, and it gives you your fib levels. I'll pull these up really quickly for you guys so you can see. You can screenshot this, or this is recorded, but you know, you can go back and rewatch this if you want to copy my fib levels. But so there's a few key things with your fibs on a flag. This gray line, it's a little bit hard to see. I apologize, but actually let me turn off the candles. There we go. Now it's visible. So the 0.5 level, if a bull flag or a bear flag, like if the candles come back and touch this 0.5 level, it will actually invalidate the bull flag or bear flag. At that point, you no longer have a bull flag or a bear flag. And Rexith, no, I do not wait. For me personally, on my safe entry of the bull flag, as soon as that trigger is crossed, I'm in puts or calls or whatever. And I actually use like stop limit orders. Excuse me. I use stop limit orders and I line them up with where the crossing of that safe entry would take place. So the second it crosses, I'm in the play without having to click anything. But that's going to have to be another video if we're going to cover like active trader. I do have a video on my playlist on YouTube that actually shows like live trading. It's the 00. You know, like my playlist is all numbered from 0 through 9. So it's my first video, 00. Actually shows how I use active trader to enter trades when they cross through my triggers. But so if we come back and touch this 0.5 level, the flag would be invalidated. And so if I turn my candles back on, you can see we got pretty close, but we didn't actually touch it. I'm going to turn my candles back off just to make everything a little bit more visible. This level is hard to see, but it's awesome that it lines up perfectly with our supply zone. So this 1.272 level is our first trim on a flag. And that's where you would take your first trim. So like if you took 3 contracts, your first trim you're going to grab here, your second trim you're going to grab at the 1.618 level, and your third trim you're going to grab at the 1.786 level. Hard to see because of our volume profile. Actually, let me turn this off. We don't need that right now. There we go. So 1.786 level is going to be our third trim. But you can also see if I turn our candles back on, as this is playing out, you know, we come to our first trim perfectly, easy exit. We almost tap our second trim at the 618 level, but instead we form another flag. And if we played the, let me erase this. So now if we grab the top of our flagpole here to the bottom of our flagpole, our next exit forms another flag, right? So here's our 272 level. We would take the break right here. Our safe entry is going to be the last touch. So right there, as soon as this blue candle crosses through this, we grab puts. You're going to be worried about your March 17th POC here because you might reject. This time we fly through it, hit our measured move at the 272 level, and then start forming another flag, right? So now let's erase these fibs and draw fibs on our last flag here. And same thing. You're going to grab your puts at the last touch, which is here. And you're going to play them down to the 272 level. These might not look like big moves, but trust me, these are going to pay you each one of those flags. The biggest one, our first flag. Sorry, let me erase these fibs so it's easier to see everything. I don't even know how I got into flags because that was not the plan today. But the break of our first flag was our biggest move. This is like probably a good 80 to 100% move on SPY, depending on how close to in the money you are on your contracts. Our second flag here, you know, you probably got a good 40 to 60% here, and same thing here, about 40% on this move here. This is where stuff gets juicy for me. So I played at least this flag, if not two of them. I think I was getting worried about what was going to happen at this POC here, so I might not have played this flag. I don't remember exactly, but I know I played two of them. I probably didn't play this one because of this POC here. I was worried about a rejection right there. Played this one down into our demand zone, and as soon as I saw these wicks, I was in calls all the way back up. So this is where our bread and butter is. If you draw, you know, your important, and like I said, these can act as supply or as demand. So this red one here, over here acted as supply, correct? And we saw downside. We hit our demand zone here and actually rejected right off of our supply zone again, back down. But then later, this supply zone became a demand zone, right? But like, you can't make this up. You guys saw me draw this out. I didn't like have like a set level in my head, like, oh, let me get it perfect so that when I show them this, you know, we're barely going to tap it and reject. No, this is just drawn based off of 50% of those volume profiles, like the 50% of the area around the point of control. So I don't know about you guys, like I already know how to do this, but it really excites me. Like when your levels hit this close, it's just too good. So I know like Jawless, other people, I don't know, Asuri, Brian, probably people in Keenan's Discord, like I called this play out in the Discord. I think I called it out early as a swing because I was like, oh, we're going to bounce here. I'm pretty sure I called it out like it might have been actually on this flag. I think I took calls right here and we started seeing more downside. And I was like, it's okay. We have a demand zone here. We're going to bounce. We're going to bounce. We're going to bounce. And it was a swing play I took into the next day. And I want to say it gave me like 100%. I'm not positive on that. Don't quote me, but I know a lot of people saw the play and a lot of people that are here with us right now saw the play. So they can speak on that. I don't remember the exact amount that it gave us, but it was a good play. But so that's why these levels are great. Once you have them on your chart, it starts becoming like reading a book. If you understand, you know, like your simple technical analysis, and I'm going to draw this really quick. As soon as I get to a blank spot on my chart here. So a lot of people, and I'm a lot of people too, when I say this, I'm not talking down to anybody. I'm a lot of people as well. I remember when I was a brand new trader and people used to talk about technical analysis and I would be like, God, that seems so scary. Like, I thought technical analysis was so scary that I just completely wrote it off. And I'm like, there's no way technical analysis can work because if it's too scary for me, like it just doesn't work. And so for the longest time, I completely ignored technical analysis. I wouldn't even like pay attention. Like I would see people draw on charts and I'm like, dude, you guys are crazy. There's no way drawing on charts, you know, can like tell you what's going to happen next. And boy, was I wrong. So, really quickly, I will show you guys, you know, roughly like, a rough drawing of what the market might do on any given day. So we have, this is important to know. I mean, I'm sure most people here know this, and if you don't, it's okay. Don't be embarrassed. We all have to start somewhere. So this is an uptrend, right? So here we have higher high. Correct. Here we have a higher low. Higher high. Whoa. And a higher low. Right? So hopefully everybody knows this as an uptrend, right? The normal like ebb and flow of the market, up, down, up, down, up. Then we might see some choppiness where, okay, so now we have a higher high. And we have a higher low. But then we don't make a higher high. And then we don't make a higher low. Hopefully right now people are thinking, oh, double top, right? Yeah, this is a double top. This is a double bottom. And then now we have a triple top, right? And when you have, so this is our uptrend. I don't like the way this looks though. There we go. That's a little bit better. So this is our uptrend, right? This is consolidation. And when we have consolidation, we want to put a box around it. And this box becomes a measured movement. And what we do is we find tools that we never use. There we go. And we put them on the chart. So once we have this box and we know we have a measured move, you measure from the bottom of the box to the top of the box, and it's 0.23%. And then you measure from the top of the box up 0.23%. And then you measure from the bottom of the box down 0.23%. And when this finally breaks, if it breaks to the upside, more likely than not, we're going to make it to that 0.23%. Because just like I showed you guys with the fibs on the bear flags, that's a measured move. This is also a measured move. We're just not using fibs for this one. If we come to the downside, same thing. We're probably going to hit this 0.23%. And I say probably because nothing is 100% certain in stocks, but pretty good chance we get there. It's a good exit target for you to have on your charts. And then we form a downtrend. Okay. So hopefully everybody can agree this is roughly, I mean, obviously different things happen during the day, but we have our uptrends, consolidation, and downtrends. And so over here, let me just label these really quick. This is our lower high. Wait, no. Yeah, lower high. I've done this a few times. Higher low. Lower high. And our higher low. Right? So we shouldn't have any arguments on this. Okay. So if you're having difficulty grasping the concept of a bull flag and a bear flag, hopefully what I've just drawn makes it so easy for you. Because this is, you know, so our normal trading on any chart, we have uptrends, consolidations, and downtrends. So if we were to throw some candles in here, I'm not going to draw very many, but we'll draw a few. We definitely want to draw one here. So these candles form our flag, right? Let me try to make this a little bit cleaner. So there's our flag. It should be clear as day now. This is as clear as I can make a flag, okay? Keenan Grace, what's up, brother? So, like I said previously, our safe entry on our bull flag is going to be the last touch, right? So if this candle here is the last one to touch the top of the flag before we rip, then you're going to want to put your entry marker right there. You know, you might have to move this down later on the next candle, but gosh, we got Keenan Grace and a Suri in here. Like, what is up? Crazy. But so, like I said, you might have to move your safe entry down to a candle. Like, you know, if we get another candle, actually, let me just draw one. Let's move this candle over. So let's say once upon a time, this was my safe entry, right? And then the next candle touches here and comes down. I'm now going to move my safe entry down to this candle here, okay? When we finally break above the top of the flag, right when we cross this yellow line, we're grabbing calls, right? And then we make our higher high, and then we have another flag that forms here, right? Same thing. And I'm not trying to insult anybody when I say this, but easy, easy, easy. We find our last touch. When we break above it, we take calls. Now let me remove these so they're not in the way for the bull flag part of it. So then same thing on the way down. We're going to draw in some candles here. And obviously this would be easier for me to show you guys on a real chart. I wouldn't have to do all this drawing. But I think when I explain it this way, it becomes clearer and easier. It's just harder on me. So we've got all of our candles in here. If you need to, draw the top of your flag if it makes you happy. I never draw them. And flags might not look perfect. Like this one's more of a pennant shape, so this is actually going to be a bear pennant. But it doesn't matter, it's still a bear flag at the end of the day. While I'm talking on that, if you have something that looks like this, this as well is a bear pennant. Okay, so it's also a bear flag, but it's just called specifically a bear pennant. Doesn't really matter. You don't have to have the correct technical. You don't have to have the correct technical name to play it. You just have to know how to play it. So, same thing on our bear flags. We're gonna grab the last touch of the bottom of the flag, or in this case, it's the top of the flag, but it's on the bottom. That's going to be our safe entry. As soon as we cross below this, we're in puts. And then while this is all setting up, a lot of people, and I used to think like this as well. That's actually really smart, Keenan. I have a tablet. I could do that with a stylus and everything. I've just never thought of doing it. I have the technology, just not the intelligence. So, when you start to see these candles showing up, you have a bear flag forming. That's where you grab the top of your flagpole to the bottom of your flagpole, you draw your fibs, and then your safe exit, okay? 272 is our first trim. 168, 1618 is going to be our second trim. 1786 will be our third trim. In this case, we hit our first trim, and then if you don't reach your second trim, then the 1272 level becomes your stop loss. So we would stop out here when we touch, but we would jump right back into puts again, basically. This is as simple as I can make bull flags, bear flags, and consolidation. And no joke, everybody on this call, if you only trade bull flags and bear flags for the rest of your life, you can and will get rich. They play out roughly 80% of the time. And if you just trade them over and over again, you'll get very good at them. And if you're consistent at cutting your stops, at whatever, 10%, taking 20% gains, and you do that consistently over and over and over again, I promise you, you will get rich. I'm going to read through questions really quick. Hopefully, Hookem, hopefully I answered your question about value area high and value area low. If I didn't, let me know. So Joseph Martinez, hopefully I answered your question already as well. So on both flags, you draw from the top to the bottom, but bear flags are upside down. But so on a bull flag, you grab the top down to the bottom. And on a bear flag, I'm going to erase that one now because it's just going to get too crowded on my screen. On a bear flag, you are technically drawing from the top of the flagpole, but it's the bottom to the top. Okay. I know there was some questions. Oh, the finest arts. I got to get to your question. Spy Trader, I think Raxith answered for you. I'll just show it really quickly. So on the volume profile, you go to settings and, whoa, why did that go away? Settings, and you change your value area volume to 68 and your row size to 200, and then yours will look the same as mine. Okay. Sorry, a lot of comments to read through here. Raxith, I know I already answered your question, but I'll say it again. I don't wait for a candle to close. If you want to be like extra safe, you can. When you're talking about like waiting for a candle to close, what you're doing is instead of using, like, if you're using the bottom of this flag as your entry, you would wait for the candle to close below the flag, and then you would hop in puts. But since I'm using the method where I'm using the last touch of the flag as my entry, I don't wait for a close. I just wait for a cross of my trigger to grab my puts. Sorry, still reading. All right. It looks like I've covered all of the questions. I mean, if you guys have more questions, let me know. I have some DMs. I don't know if they're questions or not, but I'm not going to open DMs when I'm doing a live. So now I'll get to, sorry, who asked me? The finest arts. I'll get to your question. If you have children in the room, have them leave because I'm going to cuss a little bit. I don't cuss a lot, but sometimes you have to cuss for emphasis, and this is one of those times. So I'll give everybody a moment to put on some headphones or kick your children out of the room because I am going to do a tiny bit of cussing for emphasis. So, okay, I'll answer Joseph right now, and everybody else, get your children out of the room. Follow up for the cross of the flag or using the 3-minute time frame. So I'm a scalper, Joseph, and that means I'm normally in and out of trades in minutes, if not seconds. For example, yesterday I traded SPX for $150 profit in 11 seconds. So people that scalp, and I'm not, again, I'm not like showing off or being egotistical. I'm giving you factual data to explain how I trade. I'm in and out of trades very, very quickly. So the quicker you're in and out of trades, the lower time frame you'll want to be on. Most like day traders, people that do breakout trading, scalpers, will be on like the 5-minute, 3-minute, 1-minute charts. People that are extremely good will be on like a 30-second chart. I generally trade on a 3-minute chart. It's where I feel comfortable. There's not too many fake outs and a little bit less noise than watching 1-minute candles. When I've entered into a trade, I will sometimes drill down to like a 1-minute chart so I can watch the candles more closely. But generally, I would say 95, 98% of the time I'm on a 3-minute time frame. But that doesn't mean that it's correct. That's just how I trade. So, there's people that like to swing trade. If you like to swing trade, so like if I find a bull flag on a 3-minute time frame, it'll probably play out in about 3 to 9 minutes, roughly, give or take. If I find a bull flag on a 2-hour chart, on 2-hour candlesticks, it will probably take a day to play out. So if I was a swing trader, I would be looking for, like bull flags and bear flags on 2-hour charts or 4-hour charts or something to that effect on the longer time frames. So hopefully that answers everybody's question as far as time frames. Scalpers, day traders, you're going to be looking at shorter time frames. People that like to swing, you want to look at longer time frames, where the plays take longer to play out, where it's going to play out overnight while you're sleeping. I like control of my money. I don't like to swing trade very much. So that's me. So now in comes the cussing. Going to answer the finest arts question. His question is, what was your aha moment that pushed you to profitability? I'll start by saying, like, I started learning all of the technical analysis. I started learning how to trade. I learned how to use Active Trader. I still was like, break even, profitable one day, lose another day, no consistency. Where I finally started to really become profitable was when I really stopped giving a fuck. And I really mean that. Like, I really stopped giving a fuck. So you have to look at trading as a business. And in business, you have expenses. And in our business of trading, our expenses are our losses. You can't let your losses get you down. If you use a 2-to-1 risk to reward, where you take profits at 20% and you cut your losses at 10%, mathematically, you can't lose. Even if you're the worst trader on the planet, you're going to be correct 50% of the time. If you're correct 50% of the time and you're using 2-to-1 risk to reward, you're going to be profitable. It might just take you longer to get to the end goal. If you're a good trader, you're probably correct roughly 70 to 90% of the time. If you're correct roughly 70 to 90% of the time and you're using 2-to-1 risk to reward, you're crushing it and you're going to crush through your goals. So it was when I finally really embraced that, just not giving a fuck and knowing mathematically, if I use proper risk management and I use proper account sizing, mathematically, I can't go wrong. And it was the moment that I stopped being emotionally connected when I would take a trade that everything took off. So it was as soon as, 33% is break even for 2-to-1 risk to reward. 34% is profitable for 2-to-1 risk to reward. So if you're at 50% with 2-to-1 risk to reward, you're very profitable. Obviously not as profitable as somebody that's 90% right, but you're up there. You're going to make money enough to live a nice life, a comfortable life. But so it was really, you're good, Joseph. I didn't read your whole question, but you don't need to apologize. Questions are good because other people are probably thinking the same thing you're thinking. And I'll get to you in just a second. I'm going to finish up with this. So really, when you stop being emotionally connected to the money and look at it as a business expense, and know, like, even the best trader in the world is going to take losses. You can't get down about it. And you shouldn't get excited when you win a trade either. Like me personally as a trader, I literally, so thinking back to when I started, when I would enter a trade, I would feel nervous and anxiety and excitement all at the same time, like everything, like every emotion, scared, excited, happy, worried, like everything. Now at this point, when I click buy on a contract, I literally don't feel anything. Like nothing. And that's the point that you have to get to, is where you feel absolutely nothing. And when you close out the contract, I don't care if you lost 20%, or sorry, I mean, depending on your risk to reward, I use like a 20-40. As a newer trader, you should probably be sticking to like 10 to 15% stop loss and 20 to 30% gains. And you can tweak that, like as you grow as a trader, you can start tweaking, your rules, but you want to stick to your rules all the time. It doesn't matter if you tweak the rules and then change something, but you never want to go away from your rules without changing the rules, if that makes sense. So it was that moment where, like I said, where now I enter a trade, I feel nothing. If I take my 10% loss, I don't care. If I take my 20% gain, I don't care. What I really care about is every day I shoot for about a 5% growth on my portfolio. And if you do math, I always just drop this one because most people starting out, they don't have like a lot of capital to invest. But let's just say you start with $1,000 in capital, blah, blah. You start with $1,000 in capital, and you grow your account 5% every single trading day. So excluding weekends. In 6 months, that $1,000 would be $566,000-ish and some change. A lot of money. So that's another thing that I would say to newer traders. Don't focus on your dollar gains. If you're starting with $1,000, 5% is only $50. I say only. $50 might be a lot of money to some people. But, if you talk to Elon Musk about $50, he's like, what's that? But if you talk to Elon Musk about 5% of his total wealth, that's a ton of money. But so even me as a trader to this day, I don't focus on dollars. I focus on my percentage gained. I shoot for 5% every day. I pretty much every day hit 5 to 10% gains. And you know what? At that point, I don't care if it's an hour into the trading day, 2 hours into the trading day, 5 hours into the trading day. When I hit my goal, I turn off my trading software. I get up. I walk up to my wife. I show her my profit loss for the day. And that's when I celebrate. That's when I get excited. Yeah, of course, you want to get excited like when you do good in business, but you don't do it while you're in the middle of a business transaction. You do it afterwards. That's when you celebrate. That's when you pop the champagne. And literally, I'm not joking. Every single day I go up to my wife and I'm like, look, made another 10% today. Look, made 13 today. Look, made 5 today. She doesn't really care, but it makes me feel good, as a man providing for my family. And so that's where you really want to get to, is the point where when you click buy, you feel nothing. When you click sell, you feel nothing. The biggest thing also, the biggest mistake that new traders make is, and actually I've never spoke this out, and it's a lot easier to speak out than it is to sell. Than it is to type out. The distinction between a successful trader and an unsuccessful trader is only one thing. So a successful trader will do 3 things. They'll take small wins, they'll take small losses, and they'll take big wins. The only thing that distinguishes a good trader from a bad trader is the bad trader will take big losses. Never be the person that takes a big loss. Always cut your losses, negative 10%, negative 15, negative 20, whatever your rule is, always stick to it. Never go past it. Because then that's when you start getting in the crap. And that's when you start going, oh, let me average in, and you start throwing good money at bad trades, and you just get even further in the crap, and it just gets worse and worse. And before you know it, you're down 30% on the day, and you just killed, 2 or 3 weeks of gains. And when I say you, I'm talking about myself, because I've done that more times than I'd like to admit. But I'm not perfect. And I think a lot of people, and I don't know if I should even say this, but I think a lot of people think I'm arrogant or egotistical, and I'm really not. When I'm teaching you guys, I'm just trying to help you guys with, like, not make the mistakes that I made when I was coming up as a trader. I'm still coming up as a trader. I still learn every day. I still study every day. I still work my ass off every day trying to get better and better and better. So I'm in the trenches with you guys too. So anyway, to the finest arts, just stop giving a fuck. And that's it. That's the aha moment. Joseph Martinez, when is the moment where you lose a couple of trades and say it's just not your day today? I heard grow by at least 5%, but is that the same for a loss? Super good question. So, Joseph, I don't really have a percentage where I say, oh, I'm done for the day. But if I have a couple of losses, 2 or 3 losses in a day, I'll probably just be like, yep, you know what? My head's not straight. I'm tired. I don't know. Something's not clicking today. Time for me to get up and walk away. What you want to do as a trader is you do want to reflect on your mistakes, but not where you're beating yourself up. So like every trader should have a journal, whether it be like on your computer or a handwritten journal. It doesn't matter. And at the end of your trading day, you want to write down everything you did correctly. Entered a trade, and I took the trade because it crossed above the bear flag, and it crossed my safe entry. I took my exit at the 272 fib. Beautiful trade. Everything was perfect. And then next trade, I kind of FOMO'd into a trade. I chased it, ended up reversing on me. I lost 10%. It doesn't matter if, you want to focus on both the wins and the losses. You want to reflect on your wins because you want to do the same thing correctly again. So you want to focus on what you did correctly as much as you want to focus on what you did wrong. So when you focus on what you did correctly, you look back and like, oh gosh, yeah, that worked. I'm going to do that again. And then when you focus on what you did wrong, like, oh, FOMO'd into a trade, it crossed the trigger and I chased and blah, 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 and then it reversed on me, you want to make sure you never do that again. You want to make sure you never chase a trade. It's actually one of the things I really don't like in the Discord. A lot of times, like I'll post a play like, I don't know, Home Depot's in my head. Home Depot above 305. I have people that are like, oh, I just jumped in now at 313. And I'm like, why? Like that play was done. I already played it, took 150% profit. It came back down into my buy zone. I took another 50% profit. I'm not even in the trade anymore, and you're just barely taking it, and it's in a downtrend. Like, why are you getting in it $8 after the trigger? Don't do that. Don't be that person. Don't FOMO into trades. Don't chase. I don't know, Dan. I might be talking about you, but I think I'm talking about myself. I think I'm talking about everybody today, Dan. And this is just like, this is all lessons that we have to learn as traders. This is all of the difficult stuff that we have to get past. And then the other important thing, Joseph, is when you have a losing day, there's nothing wrong with taking a day off. The other day, I forget what day it was. I want to say it was Tuesday. I had a losing day. And it was like all my own fault. I woke up, I wasn't feeling good. I was tired. When I woke up, I was like, gosh, I also woke up late, but I was like, I really want to just roll over and go back to sleep. But, like there's going to be people DMing me on Discord. I already know I probably have like 15 DMs and people adding me on Discord. Like, what am I trading? Blah, 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 blah. And so I got up out of bed, went to my computer, started trading, did absolutely horrible. I don't even want to tell you guys the percentage I lost because it was brutal. It was a really bad day. And I went to my wife and I was like, damn, look at this loss I took today. And she's like, hey, like, you know, when you're having a bad day, you need to stop and walk away. And I'm like, I know, I'm just stupid, whatever. After I was down, I was trying to force it, to make money back, and it just made it worse. And I'm FOMOing. So again, like I told you guys, I'm not perfect. I am a good trader, but I make mistakes. And when you start seeing those losses, it's hard not to FOMO and make more mistakes. So anyway, after that day, I reflected on what I did wrong. I journaled it. I reflected on it. I learned lessons from the mistakes I made that day. And the next day, I told myself, you know what? I'm just going to take the day off. I'm not even going to try to trade on Wednesday. I'm going to take a day off and just enjoy myself, not even think about stocks. And I'll come back stronger on Thursday. I don't have to trade every day if I don't want to. That's one of the best things about trading. You take a day off whenever the hell you feel like it. So Wednesday, I didn't even set an alarm. I just slept. I ended up waking up like 2.5 hours after the market opened. Got up out of bed, walked downstairs, made myself some coffee, and I'm like, oh, you know what? Screw it. Let's see what's happening on the market today. And I crushed it that day. Like the day where I was planning on taking a break, I just took enough of a break that when I did finally sit down at my computer, I absolutely just crushed. Like I couldn't miss a trade if I tried to. So when you're having a bad day, when you've got like 1 or 2 trades or 3 trades that have gone against you, really just turn everything off, get up, walk away. Don't FOMO more money and lose money. Walk away. I don't know. Spend time with your boyfriend, girlfriend, wife, husband, whatever, kids. Go to the park, go kick rocks. I don't know. Feed ducks. Do whatever you like to do. Fly a kite. Take a day off. And if you need to, mentally, if you need to take the next day off as well, take the next day off as well. But when you finally do come back to trading, come back swinging, like, ready to hit a grand slam out of the park. Let's see. Got some more stuff typed out here. YouTube video suggestions. It would be cool to look at your TOS view setup overall and for options, trading view setup, and how you use both to finish plays. Let me see. We might be able to look at some right now. I mean, like I'm not in a hurry to go anywhere. So, I mean, basically we're done with the class portion. At this point, I'm just answering questions. So, as long as you guys want to hang out, I can answer questions and kind of show you guys what I do. So, in TOS, I'll have my watch list. It probably looks really small on this screen, but this is normally on a 49-inch ultra wide monitor. Bottom right, I have active trader, and then I'll have 7 charts here. I watch roughly 26 charts at any given time, 24 charts, I don't know, something like that. And what I do is, you can see down here, I have active trader linked to yellow, and I have this watch list here linked to yellow. So what I do is, like if I want to trade, I don't know, Apple, I'll come down here and choose whatever strike. Like if I want to take 170 calls on Apple, I right click it, add to watch list, day trades, it pops up here, right? Then when I go back to my flex grid, when I click on Apple, this contract comes up down here. So then what I'll do is like, from here I can choose, how many contracts I want to buy, or I can do up, or I can just manually type it in. But I can do this right now because it's after hours. But so these are selling for $1. Normally you'll have like the ask up here and the bid down here. So you'll see 2 different numbers. Like right now we have 2,631 people at the end of the day trying to sell these for 1 penny. They got caught in an ugly trade at the end of the day today, and they were not able to get out of it. But so what I was saying with like my bull and bear flags, if I click here, this will place a stop order, which basically means when price comes up. So like, you know, if I have Apple on here, it'll show my stop way down here. So if I had a flag formed here that was coming to here, when I cross above this zone, I want that stop order to fill. So when this price gets up to $4 and my flag breaks, I'll get a fill right here. Boom, I'll be in the trade. As soon as it fills, well, I can't show you that one because I don't have any contracts of that, but as soon as it fills, I can place a limit order for however much I want to sell it for. The other thing I'll do is like, you'll see if I go below the price, I can put a stop order. So this would be my stop limit. And with your stop limit, you can keep moving it up as the price goes up or down if you want to. I have videos on this on my playlist on YouTube where I've done like a live trade where I'm showing like I'll put my initial stop at whatever. And as the contract value goes up, I just manually move my stop up, just click and drag until I finally get stopped out. And that's how I use, you know, like TOS does have trailing stop losses, and so does I'm like Robinhood. Webull doesn't, but I use my own form of a trailing stop loss where I just manually drag my stop up as my contract value increases. The other way that I like to trade is on like SPX. I think I've shown people, and people have seen, like, we'll grab contracts for like $3 and then we'll immediately put a sell at $4. So as soon as I buy, I immediately put a limit sell order for $1 above. And just, you know, because SPX moves so quickly, it might tap that $1 sell order and reverse really quickly. And if I was trying to like manually catch it, I might miss it. So that's how I like to use Active Trader. If you're wondering how to set this up, what you do is you go up to this little grid icon and you click on Customize Grid and you get this little box. And so if I click here, it'll add a chart. Whoa, that is not what I was trying to do. Nice. Let's try again. So, wow, I just completely messed up my whole grid. That's funny. I guess I can load it back in. But anyway, if you click this subtract box, it'll take a box away. The add box will add a box to the right, and this one will add a box below, right? And if you turn on the sidebar here, you'll see here it says C for chart, and right here AT for active trader. So I turn off the chart and just turn on the active trader, and then I turn off my sidebar, and then I uncheck the customized grid. And then here's my active trader. On this gear icon, I move the quantity with buttons up, auto send on and off, up above, and then I click on OK. I always turn on auto send. So that way, if I turn auto send off and I click on like, oh, I have to link it back. There we go. If I turn auto send off, when I click like to buy at limit, it's going to ask me to confirm it. I don't like the extra steps, so I turn on auto send. So as soon as I click, my order goes through. Yeah, Joseph Martinez, literally trading with Active Trader on TOS is like a complete game changer. If you're, I know I said this the other day in the Discord, if you're trading without Active Trader, like you literally are trying to win a race with cement blocks on your feet. Like you're trading at a deficit to every other trader out there. Sorry, just reading through the replies again here, see if there's any other questions. So Jawless, I have no issue with stop losses with active trader. They always hit every time. I've never had one not fill for me. Never, ever, ever. Wow, how do you see my commissions? Finest 2x. How do you see my commissions? That's crazy. But yes, you're correct. My commissions are 55 cents. So, Dan, it depends on what I'm doing. The sell stop down here, this is a stop loss. So that means if the price comes down to here, I'll get stopped out here. This up here, a sell limit, means if price goes up to here, it will sell at this price. That makes sense? And so the finest 2x, I don't have an issue telling you, you can call TOS, and if you do enough trading with them, like I think my commissions to date are, oh, I see what you're saying. When I did the auto send off, it shows it here. Okay, cool. Got it. um, I wonder what this plus 1 penny is. Hmm. So, well, it's because it's a market order, Dan. So, yeah, it's a market order. Oh gosh, I know what flatten and reversed means, but I don't remember right now. Sorry. I watched a video. I've actually never used flatten and I've never used reverse, but I happened to see it in a video that I was studying the other day, and it wasn't important enough that I remembered it. Like it's not anything I'll ever use in my trading, so I forgot what it was. Sorry, Jawless. Um, but so sorry. Getting back to finest 2x. If you do enough trading on TOS, you can call them and ask for a reduction in fees, and you should do it every 6 months. So I just called, um, I don't know, a month ago, and had my fees reduced from 65 cents to 55 cents. My mentor, his fees are 35 cents. So it just depends on what you tell them. When you call them and ask for a reduction in fees, they'll ask you like, oh, do you trade anywhere else? And I would probably recommend saying, like on Webull, I only pay 35 cents. I'm thinking about moving my whole account there or something to that effect. They might give you a reduction in fees. If you're making a large deposit, like let's say you were going to deposit 50 grand tomorrow and you put that, deposit order in and you call them and say, hey, like, I just deposited like 50 grand. I want lower fees. They'll lower your fees for you. Everybody's different though. Like I know people that have 35 cents, 45 cents. I have 55 cents. And I know people that have 65 cents. So you just have to call them and talk to them and don't get discouraged. You can call once every 6 months and ask for a reduction in fees. And you should call once every 6 months and ask for a reduction in fees. So. I do know Shorty's orb strategy, um, but he's going to be doing a class on it on Sunday, and it will be um, live Discord and here on YouTube. So, so I'm not going to try to teach it because we would be here for another 2 hours, and we already have a class scheduled for that. So for anybody listening, Sunday night, 9 Eastern, Shorty will be going live, doing a class on orbs, and I'm sure he'll probably go over watch list and other things as well. So 9 p.m. Eastern on Sunday. Right now, I'm just kind of hanging out for a minute in case there's any other questions, but I'm going to be ending this pretty shortly here because it doesn't look like we're having any other questions come through. No worries. Thank you for showing up, Joseph. I appreciate it. I think this has actually been one of the funnest videos that I've done. It was cool talking about you know, what was the final aha moment in my trading for me. You know, and I say this with like this is not BS. I really want everybody here to be successful. Like, I do this because I want to help people as much as I can. So if there's an area that you're struggling, don't hesitate to DM me or at me in a chat or whatever. I'll even hop on a voice call with you as long as time permits. And I mean, when I say I'll even do it, I will find time. I might not be able to do it right at that second, but I will even hop on a voice call with you and talk you through whatever you're struggling with, you know, to hopefully take you to that next level in trading. So when I say I want to see people succeed, it's genuine. I'm not joking. Like, I really want to see people succeed, myself as well. And so, oh, thank you, Earthly Kisses. I appreciate that. Look into the 30-second charts. Those things are crazy, girl. Good luck. If you figure out the 30 seconds charts, you know, do me a favor and DM me and hop on a call and teach me, okay? But anyway, like I said, there's no ego here. It's all love. I'm still learning myself. I have a lot to learn. I learn something every day. I learned a big lesson on Tuesday with failed trades. You know, I'm not perfect. I am generally consistently green, but I'm still human. I still have bad days. I still take losses. You know, the goal is just to be net green overall. And, you know, like I said, we're all in this together, and I want to see you guys succeed just as much as I want to as well. So, and I learn from all of you guys too. So, you know, it's information going both ways. It looks like we're done with the questions. So at this point, I'm just going to say, have a good evening, everybody. Thanks for showing up. Like always, much love. I appreciate all of you guys. Always have fun talking with all of you in the Discords and whatever else. Anyway, much love. Have a good evening. Take care. And I guess I'll see you guys on Monday, since we get a long weekend this weekend. Take that time to, you know, enjoy time with your family or do whatever you enjoy doing, and have a good one. All right. Take care, guys. I am going to close this out now. Much love.